that one. But right now, what I want to know is how to avoid false breakouts. A very, very important task for traders to identify, differentiate, figure out exactly what is the differences between a false breakout, a real breakout. That way we can, you know, be involved in those breakouts when they're taking place. A lot of stocks are near all-time highs. With the market breaking out all-time highs, it only makes sense that some of these stocks break out all-time highs too. How do we identify what are the very little nuances between an actual breakout or a not an actual breakout? And if we can identify those on the fly with the help of this video, we are evolving by 1%. So let's go watch out that video, baby. Thank you to SMB Capital for this new video. I've been waiting for something like this to come out for a while. So let's go check it out.
Okay, do you want to save a ton of heartache with your trading?
Yes.
False breakouts can not only kill your trading account.
Oh, I know. You don't got to tell me. I can see it in my stats.
In this video, Jeff Holden, SMB's head of trader development,
Jeff Holden
teaches you his technique for avoiding them and all that frustration that comes along with such losing trades. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City and proud to develop numerous 7 and even 8-figure per year traders. Watch, take notes, and learn from a professional trader on our desk so you can grow your trading account.
This might be the best way to save you trading P&L. In this video,
so good, it's got me doing
you're actually going to learn 3 steps to avoid false breakouts. This isn't a video that's going to make you a bunch more money, but it's going to save you from getting into those false breakouts. And at the end, we'll talk about an opportunity that comes specifically from these false breakouts. But the reality is, this video is all about getting into the right trades, letting them develop the right way, and sidestepping those really costly opportunities that don't quite evolve the right way. The reason why I'm so passionate about this is, actually, I really distinctly remember one of my worst rips initially after joining the firm. And I was in this trade, and it was a breakout trade, and I waited for the setup to occur, and I was really excited about it because all the variables seemed there, right? It was nice consolidation. The time of the consolidation was appropriate. The volume seemed okay, but not great. You know, like the width of the consolidation, or the height of the consolidation, the range was kind of what I was looking for. It started to do exactly what I thought was perfect. Couldn't have asked for a better setup. And I was really excited because, you know, I was here at the firm. I'm ready to put my risk on, ready to show everybody what I've got, imagining myself like thinking about how well this is going to trend into the close. And I'm going to be the trader that everybody's talking about after hours. Like, man, that guy crushed it. As soon as I put the trade on,
I'm him all the time too. Sadly, I'm not him.
It tricked me.
I'm not Himalayan.
It started to kind of work. And that led to this overconfidence in the trade. It started to go up, and it went up quickly. And I was like, oh, this is great. Maybe it's even going to work better than I think. Maybe I won't have to wait till the end of the day.
I think all the time.
Maybe it's just going to go, and I'll take my profits. And maybe by like 2 o'clock in the afternoon, I'll be getting those high fives from everybody on the desk. All of those things started happening in my mind very quickly. It seems like almost instantly the trade started going against me. It had gone up, it stalled, and then started to come back against me, and I froze. Legitimately, I think the combination of my expectations for what was possible, being up in the trade, the P&L, and then how quickly everything went against me, that led to that freeze. Just an absolute freeze. I mean, thankfully, I had a stop in place, and I was able to get myself out because of that, but I made a commitment to myself that I was not going to let myself experience that freeze again. I was just going to find a way to take that off the table. I had identified that trade working for me, having those high expectations for the opportunity, and then having something change and quickly have it come against me. Exactly what happens at a failed breakout. I identified that was a big trigger for me, for my trading. That was something that caused me to make a big mistake, one of the worst mistakes you can make in trading, and just freeze. So I became obsessed with identifying good breakouts. Good. And then more importantly,
that's what you need to get to. That you need to get into that obsession. It's like, I'm sucking dick right now. I'm just failing and losing. Ugh. How do I stop sucking dick? How do I get better? And get obsessed with the how do I get better part. And then just keep looking to get better every single day, every single day, every single day, every single day. And eventually you'll do it. Or you'll just continue to suck
dick. The failed breakouts. Breakouts are just captivating. So we're going to define breakouts, and we're going to talk about like this common misconception that we'll clarify in a little bit. But defining the breakout, essentially, we're talking about a range that's built with multiple touches on each side. We define it typically as 2 touches on either side of a distinct range. That creates that range with a clear visual pattern. What's happening during the breakout is this energy is building up. The momentum for the stock is building, and we're expecting this powerful resolution. Most of the best breakouts evolve from trading in that range, that distinct price action, into a consolidation prior to that breakout.
Okay, I need to rewind this chat. I'm sorry, because I'm not really focusing on the intro. But now starts the actual juicy part, so let's take a look at this.
So we're going to define breakouts, and we're going to talk about like this common misconception that we'll clarify in a little bit. But defining the breakout, essentially, we're talking about a range that's built with multiple touches on each side.
Why does it keep going here?
We define it typically as 2 touches on either side of a distinct range. That creates that range with a clear visual pattern.
So this is what my manager has been basically beating into me, trying to make me understand, which is this point right here. Give me a second. Let me just kind of move this guy's journal here. The idea is when a stock, let's say, ignore all of this move from here till here, right? Let's say it just did this. If it just did that one move, it did that in one straight move into a resistance or all-time high, then that's not a breakout, right? That right there is not a breakout because that is one move. Usually you need a second move and a third move, fourth move even, and then a fifth move. That's like the Elliott wave, 5 wave type of things, if maybe something like that, right? You get 1 move, 2 move, 3 move, 4 move, 5 move. That's for as to how the stock is going into the level and so on. Another concept over here is if it's clearly showing you a range where there's sellers and there's buyers, one of them has to eventually give out. One of them has to eventually die out because one of them is going to be way more powerful than the other. And here you're kind of seeing who is already in power, right? Same low, same high, same low, same high. Eventually we start seeing a higher low, same high, higher low, breakout. So this double top, triple top turning into a higher low eventually, showing you that buyers are no longer waiting over here. They are now getting higher and higher into their orders and taking those entries higher before than the original support area and being aggressive with their orders. This is being aggressive, taking fills in the middle of the range instead of being passive, which is at the bottom of the range, and then also taking fills on the breakout, aggressive instead of being passive, which is letting the stock come back to the downside and waiting for it to show support and then take fills on the support, which previously was resistance and turns into support. So now he's actually talking about, identifying the zone and identifying this area and then looking for that breakout of that area. You can see this on intraday charts. Actually, I have a great example to show you when it comes to intraday charts from my trades itself. So let's quickly try to pull up one of my trades on the day today. Let me see if I can open up my journal. Today is 25th January. Yes, let me open that. Come on. 25th January. Which one is D? There you are. View original. And now you go to this chart. Oh, awesome, you stupid computer. But yeah, look at that. Look at that consolidation right there, right around 10:15 or so. Let's go back to this chart and show you DD around 10:15 today on the 5-minute chart. Look at that consolidation right there, right? Sellers, buyers, the stock clearly double topped already. We are under today's VWAP. We're right around yesterday's low. And when I look at the stock's ATR, it clearly has a move into today's low, or yesterday's low, sorry. Clearly has an opportunity to go into yesterday's low from around here. So I took a short right around in these areas with the stop a little bit higher than this area, which never came into play on. And on the move down, I'm able to take profits. There you go. On the move down, I'm able to take profits. And that's exactly a breakout, right? That's a nice little clean range break and not getting caught up on the false break. Although I didn't really take the breakout, I was short passively into the sellers, and that way if it does go wrong against me, I'm not losing a lot more than what a short seller taking the breakout would probably lose, because their stop and my stops are still the same. So they might lose a little bit more. He loses about 20 cents, whereas I lose 5 cents. That's the difference between a passive and aggressive fill. That's something that my mind is just kind of evolving and wrapping around to kind of understanding that concept. That's why I'm not taking as many breakouts as I used to in the past, right? Not taking as many breakouts as I used to in the past. So let's go back to this video and see what he says continued.
What's happening during the breakout is this energy is building up. The momentum for the stock is building, and we're expecting this powerful resolution. Most of the best breakouts evolve from trading in that range, that distinct price action, into a consolidation prior to that breakout. Consolidation and ranges are very similar definitions. The distinction exists in that a range can last infinitely. A consolidation almost always, and a part of the consolidation is it has a pending resolution to it. So when we're talking about ranges, we're expecting it to just continue because there's no expected resolution to that. A new catalyst has to come in, new change has to occur in the price action to lead to a break of that range. When a consolidation is occurring, we are planning for and expecting a pending resolution. So that distinct change can be really, really important. But not all breakouts are what they seem. I'm sure everyone here has been in a trade, seen a really good breakout, taken the really good breakout, have it look like it might work, and then it just go against you into a false breakout. A rough estimate is that 60% of all breakouts retest, and that 30 to 40% of all breakouts fail. That's like a really broad stat, and it's not really that helpful of a stat to hang your hat on. It's kind of like saying that the average weather in New York in the winter is like 35 degrees, and it doesn't really help you when on a day like today it's like 15 outside. It's just nasty. So we're going to have to look deeper into the breakout to understand exactly how to avoid the ones that are prone to failing. If you can identify the ones that are prone to failing, you can sit back and you can change your risk allocation or your expectations for that breakout. And if it does work, you can let it surprise you. And if it doesn't work, you're more on guard. That's the first step to avoiding a false breakout. Understand the times that you need to be more on guard. And it's not every time. There's specific variables that we're getting into that we can talk about. What are the things that could occur that lead to you being more on guard? So let's look at those subtle clues that signal a false breakout. We cannot avoid false breakouts, but we can stack the odds in our favor, which is all we really need. So each breakout has a specific metric to look at. So we can talk about extended breaks, rangy breaks, or range into consolidation breaks. And then specifically, we can talk about the breaks that have too much pressure. So many wicks on one side. And the metric that we're going to use there is we're going to check the number of touches on either side of the range. Too many touches on either side of the range can lead to a break in that range failing. It's sort of like the idea of there's so much pressure and it really should have gone. And there are all these tests of that level and it just didn't do what it needed to do. If it does break out, it's very likely and prone to failing. So we have to be a little more careful about those. For rangy breaks can be prone to fail, specifically when they're not supported by increase in volume. Think about a rangy break, right? We're looking at an example of a rangy break, and when that range does break out, what should cause that range to break? It should be something new participation coming into the stock. It's very clear on a rangy break, we want to see that distinct and clear increase in volume. And then finally on extended breaks, right? So extended breaks are prices kind of up and then extends even further. You need to see that reset period. And the really simple concept that we're going to talk about is the length of the consolidation of that reset period. So that extended break is move up, little bit of a consolidation, and then continuation break. As long as that consolidation is long enough, or there's a little bit of a sidestep here, if the volume stays sustained enough, kind of going back to that rangy break, If we get that combination or a representative of that combination, those are the breakouts that we can really look for. Outside of that, everything else is prone to failure. On extended breaks, if they're not long enough, they're prone to failure. Not long enough with enough volume, prone to failure. Rangy breaks, they're especially prone to failure because it's so much price discovery that's occurring. That's why we need that.
So extended breaks, he just talks about recently, where like I just talked about recently, which is like it just runs into that line and it's just an extended move. It's not like a grinded move, it's extended move. That usually gets rejected.
Volume differential. Too much pressure breaks. You really need something distinct. If it's pressing, that is the biggest catch because visually it looks so good. The way to sidestep this, we'll get to it in a second, is really to look for the buildup into the range. So that range that builds into the consolidation, kind of what we talked about earlier, that buildup is really an important factor. And more importantly is where that buildup starts prior to the range break. So we talked about the pressure breaks. What we really want to see in the best versions of breakouts are when the pressure was actually built on the other side of the breakout. It doesn't have to be a failed breakout on the downside and then a breakout to the upside. It can actually be just pressure built on the other end of that range prior to the breakout. That pressure building and then the build up into that is exactly what the best breakouts almost always look like. The other check that we want to have in our favor for these are having multiple time frames aligned. So we talked about how to avoid the kind of really bad situations. Now we're talking all about how to identify the really good situations. And then we're going to find a middle ground in that. But having multiple time frames aligned, if it's a consolidation above a key resistance level on a 1 minute chart, but it's also consolidating above a key resistance level on the 15-minute chart. And then you get a press
on the daily
like
chart,
that might break
that'll be
to
even
the downside,
better.
but it never breaks. You just get pressure. And then you see the build starting with the volume increasing. That is exactly what we want to see when you have that multiple time frames aligned. A test up into a resistance level.
Okay.
That looks like maybe it's going to break out, maybe it's going to break out, maybe it's going to break out, and then it does break out. Is that a trade you're going to take when you have multiple time frames aligned against you, or are you going to go with the move on the other side? And then most importantly, if you get that failure before the break, this is actually the failed breakdown into the breakout. That's going to be something that really sets you up for a lot of success. If you had a distinct failure on the other side, distinct failure meaning a quick attempt lower and it failed to get lower, and then a quick, very clear build and break on the other side. Those are exactly what we're looking for. Since we've talked about the setups and what specifically we're looking for into the breakouts, and we've covered about 6 different examples, but since we're talking about the setups, that's only the first part of the equation. That just gets us into the game. We can stack the odds in our favor by understanding the difference between those and reducing the likelihood that those will fail by the setup involved, but we're still prone to failure. And let's understand why it's so important to take a look at the price action as it's occurring after we've taken the breakout and update the narrative as it's going along. So first we're going to identify that good breakout, right? We're going to stack those variables in our favor. We're going to identify a really good press and then a really good build and then a really good increase in volume. We're going to take the breakout, but then we're going to have to identify what happens in the next 5 bars. So the next 5 bars are critical after the break. They're absolutely essential because they tell us the response to the break. Specifically, we're going to talk about what happens in the next 5 bars and how the next 5 bars will dictate, in a lot of cases,
I'm
the
interested in
likelihood
this.
that we're walking into a failed breakout or a breakout that's going to give us those legs that we're looking for, that multiple opportunity to the upside. Within those 5 bars, the first check that we're going to talk about is how are the bars looking? Really what we're doing is reading the tape, but even if you're not going to read the tape and understand if the tape is aggressive, passive, indecisive, or lethargic, even if you're not looking at the tape, you can look at the bars, even just the 1 minute bars, and you can start to think, Is this aggressive participation? Is this passive participation? Those are the two that are acceptable. When a breakout occurs, you want either aggressive participation or you want passive participation. You do not want indecisive participation or lethargic participation. It seems pretty clear, but we'll look at some examples here. And as we're looking at the examples, you can see the difference between aggressive participation, where it just people are tripping over themselves.
We talked about this not too long ago, just now.
Passive
Aggressive participation, passive participation, understanding what it means to being aggressive, understanding what it means to be passive. I was a very aggressive trader. I was a very punch type of trader, right? And oftentimes when I'm just full offense and no defense, you get countered. Right? You get that counter, right? You get that uppercut sometimes and you get knocked the fudge out. And that was me quite a bit of times. But now I'm understanding more you know, passive fills, but I need to understand more in regards to when to actually be aggressive, right? I feel like some of that aggression has been beat out of me. Not going to blame anyone, but some of that aggression has been beat out of me recently. But now I need to kind of understand when to be aggressive, because that's also a tool set, right? Understanding when you can be aggressive and when you need to be passive is going to be very helpful. And this video hopefully shows you that. Should see increased volume. 5-bar aggressive participants and passive participants, both are acceptable. I'm not denying that. And, you know, they help move the market. The aggressive ones bring in some FOMO traders behind them. And sometimes the aggressive ones are the ones who are actually dictating the move and so on, right? I'm not saying passive is the only way. It's just knowing when to be aggressive, knowing when to be passive is a very key part. It's a very key part. So this video hopefully helps us
underlying
with that, right?
everything, and they're likely to just be there for a period of time. Or that indecisive, almost that like quick, like, I don't know, like, is this going to work or is it not going to work? Even worse is that lethargic. It like goes up, but then it just has nothing there behind it. Those 4 characteristics are the first starting point that we look for in the next 5 bars. 5 bars after the break tells us everything we need to know about the probability of that break working or failing. If we don't get that acceptable category of bars, that aggressive or that passive buying on the upside breaks or selling on the downside breaks, and instead we get indecisive price action, even worse, we get lethargic response to that break, we have a really clear picture of what we're trying to do and what likely is going to happen with this breakout, if it's going to work or it's going to fail. Now that we've identified a good break, what a good breakout looks like, how we've been able to sidestep the potentials of a failed breakout, and we've identified what should be happening in the next 5
Go
bars,
Denver Nuggets, go Vegas Knights, go San Francisco 49ers, China's gold market. Peter over here putting a whole parlay together. I like it.
We can add or we can fold. We'll talk about 3 different trades here and 3 different actions that you should take. So we get that passive buying on the break. And that passive buying is there. That is the situation to stand. There's really nothing to do. We're expecting that big player to be there. We don't have to add risk because that big player is supporting it. And it's likely that this trade is going to continue.
Is this what they mean by the 5 bar? 1 bar, 2 bar, 3 bar, 4 bar, 5 bar, and within 5 bars, we basically held the previous range high, showing you some support. So you could add over here technically and use that as your new support for the size that you added here.
For a nice sustained period of time. Our risk reward is going to take care of itself. The probability is showing us it's there. We just
But I guess you
stand.
already took the
if
long
we
off of
take
here,
action,
right?
If
You
we
take the
add
long
or
on
if
the
we
breakout
fold, we're
originally.
probably taking away the EV of the trade. So that passive sustained buying to the upside or selling to the downside, that's just a reason to stand. We don't look for another trade quite yet. We don't do anything with it. We just hold our position. We don't exit it. We don't add to it. We just sit there. We can add when there is aggressive buying. So that build looks right. The break is appropriate. We get that quick move up and then that sustained buying pressure where we're holding the top part of the range for that 5-bar period. The reason we can add is because that's an entirely different trade.
That's what he
on
means
its
by
own.
5-bar period. Okay.
Our add isn't adding to our core position. Our stop isn't below the
See
low
if
of
you
the
can
range
find that
or below
example
the
on
breakout price.
CGON.
Our stop's actually below that recent consolidation. We've seen
Pops
the aggressive buying. So
Right.
we're allowing that
Breaks
consolidation,
out.
that price action to give us
Consolidates
an
more than
opportunity
5
to
bars.
add to our trade. We can
But
add,
you get the
and
idea,
then
though.
look for that
Consolidates,
second
makes a
leg,
bull
and we can
flag
exit our
after
add
breaking out
into
of
that
a
second leg
consolidation
and still
range high,
maintain our
pops up,
core.
makes a bull flag,
Finally,
more
and
bullish
this is the one that
consolidation.
is most
Take the breakout.
important to know. You need to be able to identify when to fold. And we
Know
talked
when
about
to
the
hold
unacceptable
'em.
price action.
Know when to
That is
fold 'em.
immediately a fold. If you look at your trading P&L over the course of a year, over the course of your career even, the best opportunities will take care of themselves.
Facts.
And you want to make the most in the best opportunities.
Facts.
Even more importantly for preserving your upward sloping P&L curve is you want to fold when things are not at their best.
Duh.
Because those play more psychologically on you.
Yeah.
Whether it works or it doesn't
Confidence
work,
is
it
a
wasn't
killer.
working the right way.
And if it kills your confidence,
So it's really tough to sit there and
yikes.
say, if it works, wow, I made a good trading decision. If it didn't work, oh, I made a bad trading decision. The reality is it should do exactly what you want it to do, and we've identified what we want it to do. We want breakouts that are going to be met with aggressive buying or passive buying. Passive sustained buying. Finally, we talked about one of my favorite trading patterns, and really it's kind of a weird evolution that occurred, but wanted to bring it back to that. So let's say you take the trade and we get that breakout and the buying is just really lethargic, right? What do? Well, you fold, you cut your position. And then it fails and it comes back down. It turned into a failed breakout. So this is exactly why you fold your position, because now you can look at that failed breakout more objectively. Now, if that trade didn't work for me, does that mean it didn't work for everybody? Well, yes, exactly. All the participation to the upside there, everybody's wrong there. If you're disciplined enough to say, this is not trading the right way, and you fold, you exit your position, you're putting yourself in the position to take the other side of that trade, to take the failed breakout trade. So here's a very straightforward way to trade the failed breakout. You do not jump in as soon as it fails. That is like the biggest mistake, because what's happening, it failed on one side of the range, but it's really just in range. So it's into that cluster of activity. You want to watch the price action, and distinctly, if the sellers take control, once it breaks the low end of the range on the other side, you can enter the position. And ideally, it's going to break the range and then give you even a retest.
I wish they gave some sort
Those
of
are
an
the best
explanation
ones.
as
And
to what
then
it means the
continuation.
seller takes control.
But the
like
distinctness
how
of the
how is a
participation-
nobody who's just a random retail trader sitting at home supposed to understand what it means that the sellers take control? So I'll try to explain it to you the best of my ability. You know, I'm just a random who sits at home and trades with a bunch of absolute gods and trying to learn from these gods over there. But the idea is, you know, sellers taking control. Basically, I gave you an idea to the long side, or I gave you an idea to short side today, right? In terms of DD with my own trade. So let me pull up DD over here. Go to the 5-minute chart. You can see how it rejects one of my anchored VWAPs that I have. Double tops. Pulls under today's, let's go to the 2-minute chart. It's a little bit cleaner on the 2-minute chart. Double tops, pulls back down under today's VWAP, consolidates under today's VWAP, right? Basically, whoever punched long here, they're all caught off-sided, right? Now we're consolidating a little bit higher than the previous consolidation. You might see more longs kind of coming into this area. Whoever took the long here and took a loss, they might be coming back here. But what happens when these guys are wrong too? These guys were already wrong, right? What happens when these guys are wrong? They're going to punch out on the move down over here. the way you only get to see that as sellers are taking control is by watching the tape, right? If you're looking at the time of sales, you might see a ramp in the downwards action. If you're watching the level 2, you might see bids stepping down quicker than they were before. You might see the spread tightening up when it's going down, but spread opening up when it's going higher. Spread opening up when it's going higher, but spread tightening down, tightening up when it's going lower. People are fighting for their price on the way down. So you want to see that type of action coming into play in the level 2 in the time of sales. You want to see more reds, or if you have red as your down color, if you have an opportunity to set up your time of sales to show you more than more than the bids getting hit, which is basically below the bid prices getting hit, then that shows you more aggressive selling. People are not only hitting the bid for whatever size is on the bid, they are throwing more size, which is wiping out the level on the bid. Let's say the bid is at $10 and there's size under $10 at $9.99, but the size on 10 is not enough for the guy who wants to close his position. He's going to wipe out that level at 10 and take the size at $9.99, and that's going to show up on the level 2 and the time of sales, all that color schemes, and you'll see sellers actually taking control. So showing up that control, the switch of characteristics, the switch of psychology. Basically everyone who went long here already realized that they were wrong, but some of their stops might be at the low of the range, because if you're playing the bull flag breakout, the bull flag breakout teaches people to take the entry somewhere here, but also have the stop right under the previous candle lows or right under the range low, and you're expecting the width of the range to be your profit target. That's a quick little bull flag scalp. But when that doesn't happen, some stops over here are going to trigger and bring in that extra move to the downside that you're looking for. That move comes in, it pops up, but this time when it pops back up and creates a little bit of a false break, it doesn't really go all the way back up. It creates a lower low. All right, so and then that sets up for that beautiful short opportunity somewhere right here and that breakdown. So double top for me on DD, but triple top over here for this stock. Fail breaks to the top side. I think DD also actually fails breaks to the top side, right? Possibly doesn't even push into the high today, but fails breaks to the top side over there. Shows up as a double top. More selling, take control. Later on, the stock pops up to show another double top, but a lower double top than the previous double top, and see how it flushes again to the downside, right? These people who got caught off guard over here, they sold for a loss. They jumped right back in near yesterday's low. They were like, you know what? This might be a loss. I'll wait near yesterday's low. They might have caught somewhat of their money back by catching this move, but then they lost it all back again, and then they lost it back all again, and look where the stock is now. Right? So DD was a beautiful setup over there for me to get into, and he's basically showing you how you could take advantage of a setup like this if you can identify that the sellers have taken control of the stock by not letting it go back into that range high. The sellers have taken control in this range, and they're saying, okay, it's game over, longs, we're in power.
Following the breakout can give you that failed breakout setup. You don't want to take everything as a failed breakout. Everything that breaks and then fails is not a failed breakout. It's not a trade. It's just an idea that what is coming later can turn into that failed breakout. So if you get that breakout that looks okay when you take it, and then you get that lethargic price action, and then you see it start to curl back down and you have to take it off because you don't have the criteria, you can exit your position, you can take a step back, get some objectivity, watch the price action and how the sellers are taking control. And if they do take control, they're likely to take it below the low of the range and then give you a failed breakout trade where you can enter against the high of the range, or if you have the right price action, especially if you get that break and retest scalp, that second chance scalp, you can stop right above that high. And you can walk into a trade that not only did you preserve your risk on the upside,
I didn't pre-watch this
by being involved.
Right, I'm watching this right now with you. No pre-watching over
the sellers
here.
Really showed
but there you go.
To sum it all up really quickly, we're going to avoid extended breaks.
Yes, sum it up.
Unless enough time has gone by, and time usually means about 1/2 of the time that initial move occurred. So if the initial move was 15 bars higher, we want at least a 7-minute consolidation.
Oh, I like that.
That way we avoid that extended break of 15 bars, 2 bars, then we're looking for continuation.
I like that.
We're going to avoid ranging breaks without volume. We're going to avoid the pressure breaks where there's pressure to the upside, pressure to the upside, and then it breaks. Just too many touches is not appropriate. We're going to take the breaks with the appropriate buildups. That higher high, higher low, that distinct pressure on one side, and then it leading to the appropriate buildup on the other side. We're going to adjust our bet sizing, our position sizing.
Did he just
by
fart?
thinking about what do we hold, where do we add, and when do we fold. What we didn't have time to cover here is our reasons to
What the
sell.
hell was that noise?
And the reason why we didn't is we've already done a video on reasons to sell. So if you want to find a good reasons to sell video, which is actually a really nice compliment to this, because when you're in a breakout, that can be one of the biggest traps.
That was a good video. I remember watching that one.
Check out the reasons to sell video. We talk all about the differences.
I think we actually watched that on Saturday.
Maybe a more
For
trending
those of
style,
you
and you
who
can use
have
that
not watched
to
the
put
Saturday
together an
stream.
entire trade. It's a really nice guide
Like a
into
50-minute
what we've
video,
talked about
though,
here
so
on
we
how to
put it on
focus on
1.5.
and what to look for to
am I
exit
correct,
this
Tyler?
trade
Did we
or,
put it on
or any
1.5
trade. And
or
I really hope
something?
it helps.
So you're an active trader.
Yeah, I think
Not
we put
doing
that
as
video
well
on
as you want.
1.5 and we knocked it out on Sunday. I still need to clip that video and turn it into its own separate video on YouTube for me to post. I'm going to do that with this one too. Thank you, obviously, Mike Bellafiore and team from SMB Capital to help us kind of understand exactly what are false breakouts, what are not false breakouts, what you might want to be looking out for. Pretty informational video over here. We do have one more, and this one we'll watch tomorrow, on Sunday, so make sure you come in Sunday for our watch list for Monday and another informational video to learn from. Ladies and gentlemen, basically we finished all we wanted to do today. We have our watch list, we prepped for some stocks, we watched a video, we got to learn quite a bit of information from it as to what to look out for as to false breakouts. One thing that I really loved from this video, I'm just gonna throw it out there, is the amount of time the move took going into that level that you're looking to take a breakout for. You want to see at least half of that time period for the stock to consolidate before that level so you can take that breakout. For example, if it took, I might actually have an example over here and see if it makes sense. Let's go take a look at American Airlines.